So for tonight, we're consulting with Tom DeMark and his team at DeMark Analytics, whose work you can follow at symbolic.com. I'm going to spell it for you. SYMBOLIK.com. These guys have a real storied history when it comes to timing the market, one that goes back decades. They've been experts at spotting tops and bottoms in stocks and now crypto. So what does DeMark think of the stock market right now? You can understand, this guy's a legendary figure who has a ton of his own proprietary indicators, like Larry Williams, ones that I've used all my trading life, but especially is spotting moments of trend exhaustion, when something moves too far, too fast in one direction, and it's primed to give you a reversal. I think he's the best at doing this, and one of the greatest at spotting tops and bottoms I've ever come across. What does trend exhaustion look like? Well, check out the daily chart of the NASDAQ 100. This is very much about what I talked about at the top. The tech-heavy index composed of the 100 largest non-financial stocks in the NASDAQ composite. Technically, this is the Invesco QQQ Trust, an ETF that tracks the NASDAQ 100. You see these red 13s? Those are from last November. November, when Fed Chief Powell decided he was going to get tough. DeMark has a 13-session countdown pattern that tells him when a rally or a decline is likely to run out of steam. Late last year, we got two trend exhaustion 13s for the NASDAQ 100, and they marked a pair of tops, one short-term and one much more long-lasting. In retrospect, these were fantastic opportunities to get out of Dodge, the perfect chance to sell something and raise some capital. Makes sense. That was when the Fed warned you, hey, listen, the easy money's done. Easy money's over. Got to get tough. And boy, is it ever going to do that if things don't cool down. This is when everything came public that I hated, and I told you got to get out. You got to just own things, companies that make things and do stuff at a profit and then return some of the profit to you. And that was the right call. Since then, this index has become ground zero for market-wide meltdown. So fast forward to today. Where are we on DeMark's countdown? Well, right now, the NASDAQ 100 is at buy countdown 10. His methodology won't call bottom until we get to 13. That means we need 3 days of successively lower lows with lower closes before the downside is truly exhausted. In other words, DeMark's expecting one last leg lower before the weakness in tech runs out of steam. All right, well, how about the broader S&P 500? According to DeMark, we're seeing a very similar pattern. Just like the NASDAQ 100, the S&P gave you two trend exhaustions, 13s late last year, and if you sold into these peaks, well, you could have sidestepped the agony of the last few months. Also, just like the NASDAQ 100, the S&P is currently at 10 on DeMark's buy countdown. Again, that means we need 3 days in a row with lower lows and also lower closes before the selling exhausts itself. From DeMark's perspective, it's not over yet. We can see the light at the end of the tunnel, but we're still in the tunnel. Normally, when the market bottoms, you see extreme volatility and a negative news environment. We bottom when the last seller has sold, figuratively speaking. That's why I always tell you to wait for capitulation. You want total despair. What we're looking at right now could be premature buying, the kind of temporary strength that typically is associated with short covering, like I said last night. When the shorts have finished, DeMark says that often creates a downside vacuum, a big move lower once the shorts have covered their positions and there's no more forced buying. Still, after that last lurch lower, DeMark's feeling sanguine. We've heard a lot of comparisons about how the current geopolitical environment is like the Cuban Missile Crisis. By the way, something I still remember vividly from 1962, when the sky was dark with our bombers. I lived close to what was then the Willow Grove Naval Air Force Base, and I asked my mom and dad, what is that up there? Well, anyway, it was bad. But from the stock market's perspective, DeMark thinks that's just plain wrong. While 1962 was indeed brutal for the stock market, Dow Jones Industrial Average plummeting 29% from its peak in November 61 to its lows in June of 1962. That bottom actually came months before the Cuban Missile Crisis, which happened in October. The averages bounced hard going into that October, then they got plummeted again when we were faced with nuclear annihilation, and then we get another rebound. Once again, we have a non-zero chance of nuclear war with Russia. But this time the market was in a tailspin going into Putin's invasion of Ukraine. Still, if you want to run with the Cuban Missile Crisis parallel, even though I don't want you to, take a look at the zoomed-in chart of the NASDAQ 100 by way of the Invesco QQQ Trust. DeMark points out that it's currently down 22% from its November peak. Remember, that's bear market. Now, if you go with the 1962 analogy, this ETF is at 340, and it could fall to 292 before it bottoms. If the Ukraine situation drags out, DeMark thinks that the market will end up bottoming before the conflict ends. Of course, there's another important cross-current here. I'm talking about what's happening with the second largest economy in the world, and that's China. almost a year before our market peak, the Chinese market peak. Now, I want you to take a gander at this chart. Whoa. This is the HSCEI, the ETF that tracks the Hang Seng Index, going back to January of 2021. As DeMark sees it, China's been leading the world lower, but the selling could soon be exhausted. Remember, I turned very negative on People's Republic last year when the government practically declared war on capitalism. Although, if you believe the Wall Street Journal, the Chinese government is now backtracking because it's been such a disaster for them economically. An easing of the crackdown on big business would definitely be good news. Currently, DeMark says the Hang Seng Index is at buy countdown 11, and it's already fallen below his upper downside price target. That means if we get two successively lower lows with lower closes, the Hang Seng Index might finally be at a bottom. However, DeMark's not ruling out one last extreme washout that takes it substantially lower. Now, we know we saw some incredibly positive action in China last night. The government basically forced stocks up to stem a slow-motion crash that got really out of hand. The bottom line here, the charts as interpreted by Tom DeMark and his team suggest that the NASDAQ 100 and the S&P 500 and the Hang Seng Index could be within days of making important bottoms. By the way, just, I keep checking in with Larry Williams, who said it was bottoming, and he still believes that the bottom is in. But Tom feels we may be in some more pain before we get there. And remember, once again, I am dealing with the best of the best, people I've followed for years and years. I'm not a chartist, but I go to the best of the best. I want to go to Tony in Nevada right now. Tony.
Hey, Jim, how are you?
I am doing well, Tony. How about you?
I'm great, thank you. Hey, I'm